Good afternoon. My name is Kate Murphy, and I'm the meeting planner for excuse me, Independent Association of Home Instead Franchisees. On behalf of Association's Education Committee, I would like to welcome you to the next session of our webinar series, brought to you by Sourced, titled Owning Your Owner Profit. Before we get started, I have one housekeeping item to share with you. Please type all questions into the chat and we will have a Q&A session at the end of the webinar. Also, all of the presenters will have their emails available for any questions that don't get answered. I would like to introduce our presenters from Sourced. With nearly 20 years of combined experience directly in home instead, specializing in financial aspects of the business, Brad, Clint, and Drew run Sourced, a bookkeeping and consulting company focused on helping home instead owners remove the stress of their financials. Now, I'll hand it over to Brad.
Thank you, Kate, and good afternoon, everybody. My name is Brad Wolf, owner of Source and also fellow home instead franchisee owner here in Columbia, South Carolina. Do own both companies. With me today is Mr. Clint Dyer. Clint was an owner of Home Instead in South Dakota for a little over 9 years, sold a little over a year ago, and joined the Source team, has a deep background in financials. And Mr. Drew Thompson, who was the prior GM of the Denver, Colorado Home Instead. You can hopefully sense a theme here with our Home Instead expertise and knowledge and love. And coming to you today, hoping to bring some clarity to owners' financials and answer some questions that y'all may have. To kick us off, a little story here for you guys. Because I know the only thing that could keep you from watching the March Madness kickoff today was the opportunity to look at Excel spreadsheets with us three. So I figured I'd open us with this story. So fresh out of business school, young man sees a job opening, applies for it as a role as an accountant. So it's with a small business and it's being interviewed by the business owner. Man started the business himself and he says, "Hey, I just need somebody with an accounting degree, but mainly I'm looking for somebody to do my worrying for me." Young man says, "Excuse me, I don't quite understand what you mean." He says, "Well, I worry about a lot of things, and I specifically don't have to worry about money. So your job will be to take all money worries off my back." The young accountant says, "Okay, well, what does the job pay?" Owner says, "Starts you at $80,000. $80,000? Wow, that's incredible. How can a small business afford $80,000 for an accountant fresh out of business school?" That, the owner said, is your first worry. So I know being a home instead owner, you guys got plenty to worry about, plenty of things on your plate. Our goal today is to take the stress of your financials down a couple of notches so y'all can focus on doing what you do best and caring for the folks in your community, taking care of those seniors, loving on your key players and caregivers, and ultimately growing your businesses. So with that, I'm going to start us here by jumping into a P&L. Now, the goal here will be walk you guys through what we have found in our experience with home insteads, that there are several metrics that drive the business. Home instead is largely a variable-based business. What I mean by that is if there's no shift, there's no caregiver pay. And that's about half of your total cost. And so much of your business, there's also no royalties, et cetera, et cetera. So much of your cost is coming directly from having a shift or not. And so as long as we can keep certain metrics in line, we can get the ODP that we all desire. So I'm going to share my screen here and we'll jump in. All right, there we go. So this P&L is a P&L of a home instead doing $300,000 a month. So really practically, just to kind of bring some credibility to this P&L, this was based on my 6-month average at my home instead. I tweaked the numbers slightly just to make it kind of fit everybody. But if you're wondering, are these numbers possible? These are all based on my home instead in Columbia, South Carolina. So I pulled those numbers, created an average, tweaked them slightly, but this is kind of a little peek behind the curtain here of Columbia, South Carolina. First metric that I'm going to point out. because again, forget the total revenue number. We believe that as long as these percentages are in line, you can make money at 100,000 or 700,000. So first is this caregiver, labor, and wages bucket. That is your caregiver's hourly rate on any shift. 43% is our ideal range there because y'all have heard of burden rate, right? When you pull your gross profit summary at the bottom, it says plus burden rate. What that burden rate is the rest of these items and what percentage it is. So if we're at 43% in caregiver labor wages and we aim to be 2% or below in overtime, that gives us the wiggle room we need to run at a 48% or greater gross profit. In our world, being 48% or greater is probably the number one metric in your entire financial portfolio. So Drew's going to talk about that a little bit more later, so I won't get into that too much. But caregiver labor wages. So what does that mean? When you're doing your yearly rate increases, you're going to want to make the rate 43% are the caregiver pay, 43% of whatever the rate is. So really practically, if the client rate was $10, caregiver pay, 43% of that would be $4.30, right? That's fake numbers, of course, but you guys understand what I mean by that. So when you're doing those, if you're saying, hey, I want to raise my caregiver pay, how do I know what my rates need to be? Caregiver pay should be 43% of the client's rate. We're going to factor in a little bit of overtime plus burden costs, and that's going to put us over 48% gross profit. First metric done. Everybody with me so far? As we scroll down here, I'm going to skip the entire expense bucket because we'll show you a little bit later why. For this example, my expense bucket is about 9%. What does that include? That includes rent, that includes my office, that includes different caregiver expenses, advertising, communications, right? The expenses, caregiver recruitment. Nobody's spending anything on caregiver recruitment these days. So those are all the expenses in between. Factor on about 9% for that bucket there in my home instead. But the next one I want to talk about is your admin pay. We have found, this again is just my home instead, we have found being between 12 and 13% to be ideal range for admin pay. When you are at 12%, so we were running 48% gross profit, you take out 9%, take out another 12%. You can see how we're getting to the ODP that we desire. 12 to 13% is the ideal range for your admin staff. That typically means you have about 10% for salaries. The rest going to some bonuses, some different health benefits, payroll taxes, etc. And that puts you at the 12%. That is ideal. And I understand that what we're talking is generalities across an entire network from states from New York to California to South Carolina, where cost of livings are very different. I understand that. I respect that. This is generally the range that we aim for, 12 to 13%. Well, Brad, I don't want to work in my business every single day, so I need X, Y, or Z. Great. You can tweak that how you need to run the business you want to. I'm just talking ideal range for what we see. And again, my home instead was right about 12% for the last 6 months. Obviously 5% for royalties. And then you have your executive bucket, some tax and interest stuff at the bottom, interest being your loan interest, which so many of us have, which leads in this example, when we follow the 48%, 12%, 9%, et cetera, factor it down, ODP ends up being about 20%. That's what we have found. 18 to 20% is the ultimate goal for how we want to run the businesses. Drew's going to get into that a little bit more here in a bit. But this is just showing a mock P&L of what it can look like when the business is run financially sound, healthy, and stable. Because I believe each of us have duty to ourselves, to our key players, to our community, to run at this margin. Because when we do that, we're able to make more investments in our team, able to make more investments in our community, and ultimately help the seniors in our community. So with that, I'm actually going to throw it over to Mr. Drew here. who's going to talk to you a little bit further about each of those numbers.
Awesome. Thank you, Brad. And if pouring over your P&Ls at night for some light bedtime reading isn't your thing, I prefer visuals, keeping things focused on kind of the important stuff. So ODP, I realize everyone's got different backgrounds when you're coming into these businesses, but owner discretionary profit in its most simplest form, it's net income plus your executive expenses. So what you need to know, owners kept coming to us, asking us, hey, how do we manage our ODP, right? And so we've kind of created this dashboard that we provide to our clients that focuses on those important things. If it's not on this list, it's not a big deal. Don't worry about it. So we're going to cover gross profit, your top customers, top expenses, a few key financial metrics, and then average revenue and gross profit per client, and then your total expense trend. So we'll give you a little peek behind the curtains here. This is what our dashboard looks like. And as we go over this, as you can see at the top, kind of first front and center for us is that gross profit number that Brad was mentioning. This is an example of an office for February. So at the top, we have our revenue, Care Pro expenses, which is going to be your highest expense, gross profit, right? So that's kind of the top line. We also provide the option to see a 6-month revenue and gross profit trend. Again, this is kind of easier to see sometimes on a graph like this. You can do this yourselves if you want, rather than looking at a P&L with a 6-month trend. This kind of just makes it look easier to read in essence on how you're trending, right? Top customers. This shows your top 10 customers. Your top 10 customers can make up 25 upwards of 50% of your total revenue. Brad always likes to say, still being in the business, if one of those 10 customers calls the office with an issue, like those are your VIPs, you want to make sure you're addressing those concerns, because if one of those drops off or if they leave because they're not happy, your revenue is going to take a big hit, right? So that's keeping that front and center for us. Again, you can kind of come up with that on your own using the books that you have. Key financial metrics, we look at the ODP, the expense and the admin expenses. Brad went over that a little bit. This kind of just quickly shows, hey, where am I sitting at for February? There's different trends you can look at quarterly. Same idea for the expense. What's my total expense percentage of revenue? And then admin expenses, as you can see here, that 12.6% range is typically what we recommend. It's kind of right in line. Quick and easy to see, how am I doing, right? And then we can go over to the top individual expenses. Again, we're showing your 10 highest expenses in your business. So as you're reviewing this, if you can see the print on this, we have our top 10 expenses here. Is there anything that looks out of the ordinary when you review this, right? If I'm looking at this and I'm reviewing this particular business, maybe a couple things. I have admin wages, executive salaries, royalty fees. Those are always going to be up there. Marketing fund, rent, you need those things. You will have to pay those things. That is obvious, right? But maybe travel expenses. Travel expenses hits this top 10 this month. Maybe you got your legal and accounting fee. This is early in the year, so you're probably paying taxes or having your CPA review your books. Software expense, right? ClearCare. So when I'm looking at travel expenses, right, I know in this particular situation why those are in this list, but if it keeps showing up month over month, it might be something to dive into to get a better understanding of, hey, why is this showing up here? Why is this so high? Same thing, you're going to have bills, the software expense and ClearCare. Occasionally, you're going to double up a month in bills. You're paying for your bill in February and March in the same month. Those will even out. But this just gives you a good guide of, hey, where's my money going this month? Is there anything I need to look into? Are we trending in the right direction? And then we go down to keeping track of your average revenue and gross profit per client. So for an example, if we're looking at $3,500 is kind of our benchmark, right? What do we need to do? As Brad mentioned, the cost of living is going to vary. What you're charging in Maine is going to be different than if you're down in Houston, Texas. But if you're saying for simple math, $35 per hour is what you're charging your clients, I want my average revenue to be about $3,500 per month per client. So if you kind of back into that, I need to be doing 25 hours a week, right? Minimums for that client brings you to 100 hours per month times $35 gets you to that $3,500 mark. And then depending on how you want to grow your business, say, you know, the goal is to get $10,000 per month, right, in growth. That's an easy metric. I need plus 3 clients each month to kind of trend in that direction. Something to keep in mind, easy metric to give your staff to, hey, here's our goal for this month. We need to be up plus 3, right? And then in the middle down to the bottom, key financial metrics trend. Again, just another fun graph to look at to see how you're trending. You got your admin expenses, total expenses, your ODP. And then you get another chart, your total expense trend, right? Where's the money going, right? So if you look at this 4-month trend here, you know, you're running around 34, high 30s, and December is 44%, right? Typically, end of the year, you might be throwing out some bonuses to your staff, paying some taxes. So the idea is you're aware of kind of what's going on in your business. And if there's something that's kind of seems out of the ordinary, it gives you the opportunity to go in and dive more into that. Again, with the end game to get you to that front and center gross profit number that you desire. And then, so the P&L, this is kind of the sexy, most interesting one. We also provide a balance sheet and cash flow. Again, kind of stating the obvious, you have your cash balances, assets, liabilities, kind of monitors how your cash flow trends over a rolling 3-month period. Kind of the big thing on this is more probably your AR aging. Do you have someone in your office each billing period reviewing that? Are you making sure you're being proactive and collecting your invoices from your clients, right? And so again, we provide that as something to kind of keep on the forefront of our minds. Super easy to do. This is something that for those clients we do work with, they've either asked it from us or we provide it to them. I think it's important to keep in mind that's something that could easily balloon and get out of control. And the further along those invoices get aged, as you probably know, the more difficult it is to collect on. So that's kind of the breakdown of the dashboard of things we keep in focus. If I go back, the expenses, right? Key point here, if you're worrying about your communication expenses going up $100 a month, say your Verizon bill went up. If you're worried about that, you're worried about the wrong things. Take a look at your big hitting expenses, your top customers. That's where you want to be focused on, and you're going to be get where you essentially want to go. So with that said, speaking of AR and making sure it's in order, I'll toss this over to Clint, who's going to talk a little bit more about keeping your books clean and some tips on how to go about that.
Great. Thanks, Drew. Appreciate that. Yeah, as Drew said, I'm going to be talking about some bookkeeping best practices. So during my portion of the presentation, I want to talk to you all about tips on keeping accurate and timely books, which is essential to maximizing your ODP. Clients that worked with Source on average have a 17% higher gross profit and an 18% better ODP than clients that do not work with Source. And really a large portion of this is just due to the fact that owners are receiving accurate information on a timely basis. They can make informed decisions on how to better run their businesses when they get these financials. They're accurate and they're timely. So I'm going to start with your P&L. Brad showed you one earlier, showed you at the top, revenue, cost of goods sold, gross profit. That's really what I'm going to focus on a lot here as well today. How do we make sure that that is really, really clean? How do we make sure that really represents what your business is doing and gives you a good metric to operate off of? From revenue, most home insteads bill from the 1st to the 15th and the 16th through the end of the month. And I want to talk to you about something that's kind of relatively simple, but we feel it's very important. It's actually dating those invoices on your bill day. So from the 16th to the end of the month, if you date those invoices on the 1st of the next month and you export all of those invoices over into QuickBooks, it'll actually put that revenue into the following month. So at the end of this month, on the 31st, on the April 1, when you do your invoicing and you date them April 1, it'll actually put that last half of that revenue of March in April. So we always recommend that you use the last day of the month to put your to date your invoices. That will keep all of that revenue in the month of March for you for analysis purposes. So that's the first thing we recommend. The other thing we always recommend on those bill days as well is check your unallocated payments and your open invoices. Before you print your invoices, before you trigger your ACHs, always check your unallocated payments inside of WellSky. You can check these on your receivables page, then apply these payments to any outstanding invoices the client owes, and then bill the correct amounts. When you do that, you also have to make sure that you do that exact same process inside of QuickBooks as well too. You can run your open invoices report in QuickBooks. It's going to allow you to see the same unallocated payments that you saw in WellSky. Make sure those balances balance with each other, those client balances balance. And that's going to assist making sure all your clients' invoices payments are properly recorded in both systems. So to Drew's point that he made before about balancing, for our clients, before we ever issue financials to them every single month, we balance 3 different things for them to make sure they're in sync. First thing is QuickBooks profit and loss revenue to WellSky gross profit summary. We always make sure that the $300,000 that you're seeing that you build out for that month in your gross profit summary matches the $300,000 that we're seeing in QuickBooks as well. If there's not a match there, something's off somewhere. It's time to really start digging in there and find out potentially what went wrong. The next one is accounts receivable. We actually kind of consider this probably the most important thing to balance between the 2 systems. Making sure your customer balances are the same in WellSky as they are in QuickBooks. If they are not the same in those systems, an entry's off. Something's wrong. Something has not translated over properly. And as I've been talking, I realize I have not shared my notes on my screen. So I'm going to do that real quick for everybody on my clean bookkeeping tips here. So there we go. Third thing for balancing is service deposits. Not all home insteads take service deposits. Some do, some don't. Whether you do or not too big of a deal to us. But if you do, make sure they're balancing. Make sure you're balancing between the 2 systems. Again, it's a check and balance that we do for our clients every month. Now I'm going to jump into your cost of goods sold. Again, staying up in that gross, above the line in that gross profit area. Similar to posting your invoices in the month that they're related to, our best practice is to post our payroll as well on an accrual basis in the month that it's related to. For example, most home insteads, even though this is changing a lot with, weekly pay, every other week pay, depending on, maybe there are some state regulations around this as well too, depending on where your franchise is located. But a lot of home insteads bill from the 16th through the end of the month. And then that payroll actually hits your bank account on the 8th or like the 14th of the next month. We always take those entries and those transactions that hit on the 8th and the 14th and backdate those and put them on the end of the prior month because they're related to that month. What that does is that gives you a very clear picture on here's the exact revenue I made in that month here, and here's exactly what that revenue cost me to produce in that month. If there is any sort of overlap into the next months, what that does is that kind of jumbles up your gross profit a little bit. And it doesn't give you a very clear picture on how that's performing and how that looks. If you are in a scenario where you are paying weekly and it's naturally overlapping into other months, depending on when that first of the month lands, we generally say try to make sure you're looking at your margin at least once a quarter. Hopefully that quarter has evened out some of those things, and that quarter margin is what you're shooting for to get to that 48%. The other thing that we see sometimes is we've seen some franchises historically not break out caregiver overtime. You saw in Brad's P&L where he had caregiver overtime broken out. He's shooting for that 2%. If that's not broken out there and it's buried into his caregiver labor, it's a little harder to find that and how that's relating up to your revenue. And you kind of got to hand calculate that percentage, if you will, by using your gross profit summary and backing into it. A lot easier to see if you just break that onto your P&L, reach out to your payroll representative, have them break that out and code that accordingly. The other one is workers' comp. It goes into your burden rate. Make sure that's broken out. It's put above a line into your gross profit. And it's not buried inside of your insurance expense either. So now I'm going to jump just down to expenses. Not going to spend a bunch of time here on expenses, but just again, some tips and tricks that we find that really help people control these things and really help give a good a visual of where you're going with these. Bank account and credit card reconciliation, probably one of the more important things you can do in your expense area. Essentially, what this process does is it balances your bank accounts and your credit cards to QuickBooks. If you do not have these things balanced, you do not have them in sync, you potentially could be missing transactions that's affecting your ODP. And like, hey, my P&L looks really good. Oh, wait, you don't have a credit card statement in there. You got to make sure you've got all that information in there. Or potentially you could be over spending something that really doesn't exist. Like you might double up on some expenses somewhere. This expense reconciliation will help you find those issues and fix them right then and there. And that way you've got really clear financials at the end of the month. Also take advantage of some of the QuickBooks technology, honestly. One of the big one is syncing your credit card accounts and syncing your bank accounts to QuickBooks. Let QuickBooks do the heavy lifting for you. No need to manually enter anything. Let QuickBooks bring it in, let them sync the data. QuickBooks Online is especially really good about this. I'll talk about that in just a second. But also when you are classifying these transactions, don't just dump it into communications or dump it into caregiver and recruiting. Put a vendor with it. We put vendors with every single one of our transactions that we book. And the reason for that is if a spending line does kind of get out of whack a little bit, and you're like, man, why am I spending 5% in caregiver recruitment when I should be spending, whatever, 3%, and you're overspending something. If you do not put those vendors in there, it's going to be harder to research and find those things. You're going to have to rely on the bank memo that the bank puts in there. It's a non-filterable field. You can't run reports on it. So stick vendors in with all your transactions as well too. So if something does get out of whack, you've got a better way of going in and researching and finding out what has happened. Now I'm going to go jump over to your balance sheet really quick. Not going to spend a bunch of time here either, but going to really just focus on your debt. Most home insteads have some sort of debt, SBA loans, lines of credits, car loans, whatever you might have there. Loan payments have principal and interest components, and you want to make sure both of these components are recorded properly in your financial statements. The interest portion of this payment goes on your profit and loss statement, whereas the principal reduction portion of that statement goes on your balance sheet, and it is reducing the value of that asset or of that loan on the balance sheet. A lot of times we might see, hey, they just dump all the payments, all the loan payments just directly to the balance sheet. And then your balance sheet after a while starts to look like I have a negative loan balance. This doesn't make any sense, right? That's because you don't have that interest expense out of those payments and moved over to your P&L. Also, car payments. A lot of times people will do the exact opposite with a car loan payment. They'll just put the entire loan payment to their P&L when the principal portion of that payment actually has to hit their balance sheet. Lease payment, different ballgame. That can actually all hit your P&L. So just want to talk about that. Make sure you've got your debts and your payments on those debts recorded properly. And then really quickly, I wanted to talk about QuickBooks Online. No, we are not getting a kickback at all or anything about this nature. I promise you. But we find that QuickBooks Online is the best version of QuickBooks to use. It's easy, it's simple. It's got a lot of advantages over desktop. I do believe in July of this year, 2024, Intuit is actually not going to allow people to buy brand new desktop licenses. Everybody's going to have to go to online anyway. So this is something that's coming regardless. So kind of do get ready for it. But QuickBooks Online, few advantages of it. It's portable. Anywhere you've got an internet connection, you can get to it. It's not stationary on one PC like your desktop is. It can be you can get it at home on your home computer. You can get it at work on your work computer. Laptop goes down, go buy a new laptop, boom, QuickBooks is back. Which means, hey, you don't have to back this thing up anymore. There's no risk of losing a backup. Something happens to that backup file, you can't get to it, and you're redoing work. Multiple user use is a lot easier. Most of our clients use QuickBooks Online. They're logging in on their side. We're logging into the same thing on ours. No need to share servers, no passwords, nothing like that. We just have nice, easy access to it. Plus, it's just a faster system to use. It's not as clunky, it's easier, it's web-based, and it's a lot easier. All functionality that's inside a desktop can also be used inside of online. One thing I liked about it the most is when I went over to online, because initially I was like, oh man, I'm just so used to desktop. That's all I've used my whole life. And then I go to online, then Web Connector went away and I was sold, right? So when you export payments and you export invoices out of WellSky into QuickBooks now, you just hit that export button and literally in 45 seconds, they just magically appear in QuickBooks Online. You don't have to go over there. You don't have to run a web connector. You don't have to do any of that stuff at all. Same with your bank and your credit card transactions. When you sync those things up to QuickBooks Online, no web connector. Every single night, they reach out to your bank, says, hey, bank, you got new transactions, brings those things in. Also, when it classifies those transactions, QuickBooks Online starts to learn what you're doing. It starts to learn these transactions. And after time, it will actually start defaulting in, hey, we noticed that you code this to Verizon Wireless and you put it to this communications account. It'll just start automatically doing that for you and say, hey, do you want to do this? And you just hit the quick confirm button and off you go. Desktop does have some of that functionality, but online is just so much better. The other thing is automatically connects to ZWise. No CARS tool that you got to run to upload anything into ZWise anymore. It just automatically reads it. For our clients, we set that, it's a service we have. We just set it up on the back end for everybody and automatically sets up the ZWise. Last thing I just wanted to really quickly touch on is be timely. Don't let all these tasks stack up for months. I was a homestead owner for 9 years. I got a finance background. I now work for a bookkeeping company. I know how easy it is to let these things stack up. I used to do it too. It's like, man, I am 2 months behind, right? Guess what? By the time I get all that information gathered, one, I'm in a hurry. I'm trying to get it all together. I might be just kind of halfway doing it, not getting it quite right. Interruptions are coming in my office. My phone's ringing. All of a sudden I realize it's 2 months down the road and I've made a mistake 8 weeks ago. And now I can't correct it. It's too late. I've got 2 months of mistakes I've now got to fix. Be timely. Be in your books on a weekly basis. Just check it out. Get in there. And make sure that you're just staying on top of it. Otherwise, you got potential to get burned by it just because nothing's timely and you can't make those decisions. And that's really a big part of making sure that your ODP is being maximized. So, okay, that's all I had for you guys today. I'll share my screen and I'll shoot it back over to Brad real quick.
All right. Sounds great. Appreciate it, guys. I know we went through a ton of information here. Emails are in the chats. Kate's put them down there. We are going to open up to a couple of questions here at the end in just a second. But before we do, goal with all of this isn't, just to be a big plug for Source, of course. I did wear this shirt just for all of you guys. But the main goal here is to show you just some really practical things that we talk about with our team, talk about with owners that we get the pleasure of working with and saying, Clint dropped a stat about ODP and gross profit being higher. It's not because we're so amazing or we're doing anything to move those needles. We believe that when y'all get the data quickly, accurately, on time, and know how to read it, you can make judgment and decisions within your business that lead to better outcomes. So good data leads to better outcomes in our world. So that's what we see over time. If y'all want to chat about that anytime, again, reach out via email to any of us. Be happy to. We'll also be at convention as a vendor, so come see us. We'll have a booth there, and then I'll also be attending as an owner in some sessions. So come find me. Be happy to talk there. With that, Kate, I think we'll open it up to just a few questions that kind of set the table here a little bit. Can't really get into like your specific, why isn't this working questions, but if you have general questions on anything we presented, we'd be happy to answer them.
Awesome. Well, if anybody has any questions, please feel free to put them in the Q&A. And also, if you raise your hand and you'd rather talk, I can allow you to or unmute. So if anybody has any questions, feel free.
go over pricing?
Looks like we have one in the chat. Did you go over pricing?
We did not. I'm happy to.
I'm pouring in.
So we do, David, we do work with, we have a handful of platform agencies we work with. The pricing that I'm going to show you is geared towards traditional model owners. That's what I am here in Columbia, South Carolina as well. Really transparently, the platform is significantly simpler. So it's actually a good bit cheaper than what you're going to see here. I'll show it. How long does it take to set up, Mary? We take on 2 to 4 accounts on the start of each month. We're currently booked through April, and so our next start date is actually May 1st. And we do that. We bring them all on at the same time because really simply, it just helps us keep everything in order with our team, make sure y'all have a smooth onboarding, and we find the end of the month is the cleanest time to make that transition. But here, I'll share my screen and can show this really quickly. And then if anybody wants a copy, please just reach out and let me know. I would be happy to send it to you. So this is pricing sheets without getting into too much. Again, it's really simple: bronze, silver, gold, platinum. We have different plans. As you can see, they include different things. And skipping here to the bottom, everything down here pricing wise is based on your running 3-month average. So what did you average revenue wise the last 3 months? That's what tier you go into. So if you did 300, 310, 300, you'd be in the 300 to 350 range. And if you wanted bronze, there's your price. It's really that simple. Again, I can send you this and how you know what comes with it. Really, the quick answer is bronze is basically bookkeeping. We do your books, we do your QuickBooks, but we stay out of everything else. Silver starts to get us into some of your bill day where we actually run ACH and credit cards, reconcile your AR, handle service deposits. And then that's where that dashboard that you saw comes into play, is that silver and above. Everything includes ZWise. You're welcome. We are, I know that's a big hot button for everybody around here. Gold, we start to get into actually like long-term care submissions. Yeah, like really practically help you set that up and whatnot, as well as the big one for gold is also includes a 30-minute review every single month to go through your books, as well as some annual budget prep stuff. And then finally, platinum is really that. I mean, we get into VA, we get into Medicaid. Who here had Change Healthcare crap out on them this month? That's been a giant headache for everybody and something we've been going through as well. We have a VA expert on our staff who helps walk through that. And then we actually help with those submissions. And really, you know, for all intents and purposes, run most of the bill day for y'all, as well as some additional quarterly planning. So again, if you want that, reach out, let me know, be happy to. Thank you, Mindy, very much. Very glad to hear it. Love the positive feedback. Same with you, Kim. I already owe you and Josh a drink at convention, so now that's 2 drinks. Yep, Jack, we can do that. We'll send that after the call. Any question, in regards to ODP, any questions in regards to, those percentages that we showed? Rate increases is a big question that we get around the end of the year, start of the year. It's kind of been that time for a lot of folks. When we run the rate increases at 43%, it's a percent that we use. So if you're giving $1 increase to your clients, you can give 43 cents to your care pros, really practically, and keep within those percentages. I'm sorry, I'm falling behind. Yes, anybody who puts their email in there, we will grab those and shoot you a quick email with it. We do. So depends on how your offices are set up. Without getting into that too much, if you're running 2 as 1, if you have 1 WellSky and 1 QuickBooks, even if you have multiple locations, it's just a little bit extra to kind of run the 2 separate classes or 2 separate locations. If you have 2 full-on different offices, that is 2 fully separate setups. And so really practically, I forgot to mention, anybody who mentions that they heard about us through the association gets their sign-up fee waived. That's part of our agreement with the association included in there. So make sure you mention that when the time comes.
Or Brad, we're gonna have a dunk tank at convention with you in it.
That's a lie. That is a lie.
Also
Zero,
wave it.
unless Drew is in the tank, 0 dunk tanks. I love the idea though.
I just see Bryson had a question in there if we've transitioned anybody from Books Plus and how did it go? Yes, we've transitioned several from Books Plus. It goes pretty smooth. Really, that transition is probably one of the smoother ones out there, honestly.
Yeah, very comfortable with that.
We did have one question in the Q&A. Do you typically include owner's salary in your ODP percentage reported out, or do you keep owner salary tied into expenses?
Great question. So, yes, ODP is here, you know what? I'm going to share my screen. I'm going to show you guys exactly how we calculate it, if that works. Everybody have me here? Perfect. So this is the executive expense bucket, correct? It has salary, has health benefits, has an automobile, has charity, etc. All your executive expenses total out right here. So that's the total of this whole bucket. Plus bottom line net income leads to this. This is a very simple version of ODP. So this is not, if you were selling your business, we would add in a couple other things and tweak a little bit more, but simplified. If you're looking for like the 30-second version of your ODP, that is the quick and dirty calculation. Literally, that's how it's calculated on this sheet. You can see it is just the combination of those two buckets there. So yes, your salary gets factored into that and not in the expense bucket. The expense bucket is everything from royalties all the way up through automobile is what's included in that general expense bucket. However, for my calculations here, I pulled admin out and I pulled royalties out. And that's where the 9% comes in from just things like rent all the way up through automobile. Hopefully that helps answer that question for you.
I think there's a few more in the chat.
Timmy
How
asked how
many-
many offices we've got going. What are we at, Brad?
70 something. I've lost track. Somewhere in there, in the 70s. Pricing.
Other LLCs, yes, that we do. If other owners have other LLCs, like some people have other like rental LLCs that they own their building, we will also manage those for you as well too. Yes.
Correct. Most common property management companies. A lot of y'all have property management companies. Happy to help with those as well. Usually very, very simplified. It's a pretty cheap add-on typically to add that to your home instead because it's so few transactions typically. Unless you have a massive real estate portfolio, then I want to have an offline conversation about that to figure out how you did it. Use source. Thank you very much, Leanne. That's awesome. That's very kind of you. We'll try to grab everybody. Kate, really practically, are we able to save this chat so I can grab all those emails?
Yeah.
Afterwards?
We should be able to. I'm also telling people to email you guys, so that's a quick respond for you guys. I think that might be a little bit easier than doing this, but I will download the chat to try to
if you
make
don't
sure
mind,
that
if you
we
send it to me,
cross-reference.
I'll send it out to everybody and I'll just blind carbon copy everybody so y'all can just respond right to
There we go.
the
If you send it out to everybody, then everybody gets it, whether they want to or not.
Perfect. Perfect. That sounds great. I love it. What was this? Can you talk about exact travel expenses? Ooh, love that question. On our P&L, really practically, so we at our homestead we earned a growth summit this year, which was great. So we just went to Hawaii a couple weeks ago. With that, we deem that a business expense. And so we actually put it up under the travel expenses, the 5140 categories that you're talking about, travel and meals. Same when I go to convention. Those two things will be direct business expenses. Now, any other travel that you're looking to put under there would go under the executive bucket if it's not directly tied to Homestead corporate or directly tied to a Homestead sanctioned event. You're getting into sticky territory there a little bit. Accountants are going to start yelling at me if I push this one too much. But I would break it out into your executive bucket and then work with your accountants individually on that. Only ones I use personally for the 5140 is convention, growth summit, or if you're going to a certain meeting, like I know they've had like the multi-franchise meetings or the platform meetings or different stuff along those lines. That's where I would put the actual 5140 travel expenses. Hopefully that helps answer that question. That is a great question. Q&A, very generic. What are your thoughts on using owner disbursements for categorizing certain expenses? So love that question, Chuck. I think 100%. How many of us have personal expenses that come out of a personal account that are business related? So what I would say, you can pay yourself back for those expenses. So really practically, you go out and take out cash for the business because you got to give somebody the old $100 handshake in your office as a little thank you for something. And you take out a personal for whatever reason, right? You just took it out of your wallet because the cash was easy. You can pay yourself back from the business. When that hits the $100 hits your business account, you allocate it to what the cash was used for. And so in this case, if it was a bonus or if it was petty cash, whatever it is, you just allocate it there and you can pay yourself back. So at the end of the month, I'll look at anything that I did before I take my disbursement. I'll look at anything that I spent personally. I'll take that money back first, and then I'll take the rest in an owner disbursement. Want to maximize the tax benefits. If you can expense it, let's expense it and let's take the tax benefits at the end of the year. So yes, great question there. I like to do it separately just for simplicity's sake on my own end. If you do it all together, you're just gonna have to split the transaction, put some as disbursements, and then some as the expense category. Hopefully that helps. Drew, Clint, you feel good about that answer?
I think you're spot on.
Got it. Got it. Perfect. Yeah. Got a couple minutes left. Any other final questions here? Well, while we're waiting on that, I'll kind of prep us to close. Again, if you have any or want to take it offline, please let us know. Or again, we do trade food or beer for advice at convention. So if you find us, I guarantee if you buy Drew or Clint a beer, they'll answer whatever questions you got. So find us there. We'd be happy to help walk through any of that stuff with you guys. Again, we've all cared deeply about Homestead and this network, as so many of you do, as evidenced by your participation here with the association. And so our goal is just to help take some stress off your plate, take this part, hopefully, into an area. Oh, I see that last question. An area that makes your life a little easier, where you can make really informed business decisions based upon the data. One more question here. Would your admin team train? Yes, absolutely. I would do the 5140 myself. Well, again, yes to both. If it is training related, I would do it under admin training. If it is convention, you're taking them to a Homestead event, I would do it under travel expenses. That is me. You're not going to fight me on. I mean, if you fight me on either one, I'm going to agree with you because I don't think it's half a dozen of one, six of the other. But that's just what I do. I keep the travel expenses category typically for Homestead sanctioned events primarily. But both are going to go under the write-off category either way. So it's more so how you want to see your data as opposed to a specific tax benefit. Which I love. So see, at convention, when you go and buy Clint a beer, it's also tax write-offable.
There you go.
Excellent.
Everybody remember that.
Everybody. Yeah, Drew's, I don't know if those are tax expensible though. I think it's only Clint's. I'm just joking, Drew. Yours are too. Somebody raise your hand. I don't know how to get to that key.
You said somebody raised their hand.
Yeah, it was quick. Maybe that,
I
maybe
can
we,
find them.
or maybe they're just tired of listening to us, which is fair.
I don't see any hand raises. Do you see it?
Awesome. Like I said, final minute here, and then we'll pop off. Let you get back to your busy days and enjoy your March Madness.
Yes, and all of these will be on the Home Instead website as well as a recording. And if you have any other questions, feel free to email Brad, Clint, or Drew. And also Brad is going to, I'm going to get him a list of all the attendees with their emails so that we can send out pricing, and then that way they can respond to you with any additional questions.
Yeah, that sounds great. Sounds
Awesome.
great.
Thank you, everybody, and hope you have a great rest of your day.
Awesome. Thank you guys for having us.
Thanks,
Appreciate it.
everybody.
Your day.